welcome to Credit Score Secrets. In this webinar, we're going to be exploring all sorts of topics related to credit. We're going to be talking about how credit scores work and why they matter, some tips to boost your credit score, and then we're going to go over some common mistakes that hurt your credit score, and we're going to be busting some credit myths today because I feel like there's a lot of information out there about credit, so we're going to break it all down, what's true, what's not true. And my name's Audrey. And joining me today is Yesenia Hernandez. She is our lending supervisor here at Shell FCU. Welcome.
Yeah, thank you for having me. I'm excited to talk what I find to be fascinating, all about credit scores, and hopefully getting, just some information out there for everybody.
Yeah, I'm really, really excited about this webinar because like I was saying a second ago, there's a lot of information about credit out there, and we know that credit is such an important piece of our financial wellness. And we're going to get some really good actionable tips today about boosting our credit scores and some really good information. So are you ready to get started?
Yeah, I'm ready. Let's do this.
All right. So we're going to start with the basics. I think that most people are aware that credit scores exist and that they're important, but they may not know exactly what a credit score is and what all goes into it. So can you please break down for me what exactly a credit score is?
Yeah, so, I'll try to keep it as basic as we can, right? Not to overwhelm anybody. So the score itself, that is just, again, going to be the actual number, right? So your credit score is a 3-digit number. It can range usually anywhere from a 350 to an 850. So the higher the score, the better, right? So ideally 850 is, excellent. I'm perfect on my credit. And then, of course, the lower, we've maybe had some hiccups along the way. Now, these can be different. Your score itself could either be coming from several different scoring models. So it could be a FICO credit score, or it could be a Vantage credit score. Those are the, main two players in that realm. But again, the score, it's just the 3-digit number that is basically determining your credit worthiness. How risky or unrisky are you? The higher your score, the less risky. The lower your score, the more risky. And then we'll kind of get into how they use that to assign rates to determine, your loan.
Okay. So who creates the credit score? Where does that come from?
So the credit score itself, and it's, we kind of talk about, there's a lot of information out there, but what exactly is it? So you have the actual credit bureaus, right? So you have Equifax, TransUnion, and Experian. Those are the bureaus themselves. A lot of people think, okay, they make their own credit score because someone pulled Experian, that was their score. But that is just, the umbrella of who's reporting the information. So any financial institution or maybe a small dealership or credit card companies, they pay to report the information, right? So they're going to be reporting it to either 1, 2, 3 credit bureaus. And they're just saying, hey, this is how much the loan or the trade line was for, the monthly payment, the current balance, but they're not making the score. So within there, you have the scoring models, which, again, the two big ones there is going to be FICO. And they're been around, actually started using more of scores since around 1989. So they've been doing it longer. Vantage is more of the newer, guy in the game. They started around 2006. So it is newer. It's, trendier. It's out there right now. So you will probably see a lot of apps and so what that use the Vantage. And again, it's just whichever one. They should be fairly close. They're still doing the same thing. Their job, again, is to determine the risk that you may be, your credit worthiness, but they're the ones that their actual scoring models is what's going to be determining the score that we had talked about.
Oh, okay. So what kind of information makes up your credit score? So what are they looking at in terms to decide what your number is?
Right. So again, they both have their own algorithms built in, but overall it's going to be pretty much the same thing. So as most people would guess, the number one thing they're looking at is how do you repay? Are you paying on time? Are you paying late? A credit report actually breaks down the amount of times you're of course on time, but if you're late, 30 days, 60 days, 90 days. So that's a huge one. That's going to be your biggest factor on regardless of if it's a FICO or a Vantage is your repay. They look at length of time accounts have been established as another one. Is everything new? Maybe they are risky because they just opened all this. Your mix of credit. Do you only have credit cards but never had an auto or a mortgage? They look at your utilization. Are you maxed out on everything? How much do you owe on the credit cards? So overall, they're looking at the same things, and they're using all those factors to determine, okay, where do we think the risk falls in this person? What score should we give them to help assign a rate to their loans? So again, they're fairly similar. If you are crazy like me and enjoy this and go Google it and read it, you'll see that their charts are a little different. Like repay history. FICO considers it 35%, Vantage considers it 40%. So slightly different, but overall it's the same things that make up that score.
Okay. And then let's talk about why does it matter? So, we know higher number is better, but what does it affect in your everyday life?
Yeah, so that's another big thing. You're like, why do I care? Like, it's a score, it means nothing to me. But it should, For one, like I said, it determines your credit worthiness in general. So it could be the difference between an approval and a denial, right? So, of course, that is something we pride ourselves on. We don't just look at a number, but not everybody is us, right? So others might have an automated system where it just looks at the score and that's it, right? They don't look at the bigger picture. They don't have that conversation and really get to know what's going on. So if it's somewhere like that, your score could be it's over right there, right? But also, say you are able to get it approved. The interest rate itself is what you're paying back for borrowing the money. So, say I'm short on money today and I'm like, hey, Audrey, can I borrow $100? And you're like, yeah, but since you need my 100 today, you got to pay me back 120. Right? The $20 is the interest. So that's what every loan is, right? That's interest is just what you're paying as the thank you penalty for borrowing the money, right? So if they're looking at your credit report and you're like, okay, they're not risky at all. They've never missed a late pay. They've had this type of loans, for years. I give them a low interest rate because I'm probably going to get paid back, right? Now, if we see we've had some charge-offs, some repos, maybe some late pays, maybe now I'm getting more to 70% chance I get my money back, then we're going to give a higher interest rate to help justify what might kind of be, a little bit riskier of a loan. Just to kind of put things in perspective, if, we're both looking at the same car, we both have a drive out of 25,000, but say your rate is 4.9 because you have, excellent credit, and mine might be a little more rocky and I'm at a 10.9, we're looking at monthly payment about a $75 difference. So already off the bat, you're paying $75 less than me every month. Over a 5-year loan, that could be about $4,500 in interest more. Same car, same loan amount, but I'm paying more every month because I'm giving, the lender $4,500 more at the end of that loan for them letting me borrow it because it was a little riskier to lend to me, So it's huge to what your bottom line is going to be monthly and overall in interest. I mean, we work hard for our money, right? We always say nobody wants to just pay back for getting a loan. That and other things that you might not think about. If you go to open up your first and your own cell phone and you don't think it's about credit, they pull that type stuff. Insurance companies pull that. If you're trying to rent an apartment, they pull that. So a lot of things that you might not even realize is a credit score matters or your credit worthiness. It does, even though it's not necessarily a loan being given to you. So again, just overall in life, it's a huge thing. Every American should take pride in that score, right? That's way of no one even knowing you, but they pull it and okay, we can make something work here. They're trustworthy, so definitely something you should care about.
Yeah, I like it for me too because it kind of gives me a tangible look at kind of representative of where my financial wellness is, and I'm just like, okay, I just love watching the number go up. Yes. It's so satisfying. I'm like, yes. I got to make sure I do really good so that my number goes up.
Exactly.
Okay, so now thank you for explaining why they matter and what they are. So can you now give us some tips on boosting your credit score? So if you want to improve your credit score, what are some things that we should be focusing on?
Yeah, for sure. So of course, kind of like we already touched on, I would say the number one thing is make your payments on time. Even if it's just a credit card and you're like, I can only afford the minimum payment this month, you make sure you're making it, right? Making those payments on time. I would even say if you, financially are able to set up auto draft, I'm a big advocate for that. Even if you have the money, sometimes life is just really hectic, right? You're running around. August is back to school, starting sports and everything's going on. You might just forget. And you're like, oh, no big deal. I forget. It's huge, it could really hurt. So I, big, encourager of auto draft. Again, making sure you're paying it on time. Keep your utilization low on your revolving accounts. I think a big one is maybe assuming, hey, I have a $500 credit card. It's okay to have it maxed out as long as I'm making my minimum payment of $30 every month. Well, actually, overall, like I said, there's those scoring models. They're built to say, hey, something's maxed out. This person may be struggling. So let's lower the score to show the sign that, to show that. Because they don't know for sure. For all they know, you maxed it out one night and you just haven't paid it off and you're going to pay it off. But you forgot. It got reported maxed out. Okay, let's lower the score a little bit. Let's be careful. They might be struggling, right? That's the job of the score, right? So lower utilization, I think a big rule of thumb that's kind of always been out there is 30%. I say if you can do better, 10%, try to keep them around 10% because you're potentially, think of your utilization, every point you're utilized is kind of losing a point on your score. So if you're 100% utilized, you could potentially, again, depending on the score model and the version they're using, be losing 100 points on your credit, right? That's huge, especially if it's on a $300 Capital One credit card you opened when you were 18 and you don't even realize, right? So again, utilization's a very big one. That's number 2 would be the biggest, takeaway I hope from, of course, paying on time. Don't close old accounts. Like I kind of said, that Capital One credit card that might have been sitting there since you were 18. You're like, I've had it 10 years. I barely, seldomly use it. Let me close it out. But your average length of credit's another thing. So if you might think I haven't used them in a long time, let me just close them. But those were all your well-established trade lines. Now all you have are new. The overall score says, okay, hey, they don't have a lot of history. Maybe they're a little more risky because all their credit's new. Again, so don't use them, use it for something simple. Go to McDonald's, use it in the drive-thru, pay it off. Just keep that activity on it, keep it open. Because again, you could be hurting yourself by closing those without even realizing it. A lot of people, I think that's a positive. Like, oh, okay, let me close it because I haven't used it. I don't need it. But then you length the time. There's a lot of things like in the background built into the credit score models that you have to realize you think are positive, but could, potentially hurt you. So that would be another one. Don't run your credit like crazy. A lot of people may think, oh, okay, I'm at the store and maybe you're at the mall in 3 different stores. Like, hey, you want to open that for 10% off? Not thinking anything of it, but you have excessive inquiries and especially all back to back. Again, all the algorithm is built to do is try to determine the risk here. Is there a struggle here? Are we not able to pay our bills? Are we living, too tight? Several inquiries, several new accounts say, okay, something happened. They couldn't afford it. Let's lower the score. They're a little riskier, right? So I wouldn't do that, The goal, I would say, is maybe 2 to 3 inquiries a year, right? That's a year, not one trip to the mall, 2 or 3, right?
Every store.
Yeah. So the credit reports, usually standard is it's 24 months of inquiries. So you don't want to have, double digits, this large excessive amount, because that, again, could be concerning. So yeah, again, pay on time, low utilization. Don't close those older trade lines. Don't run your credit like crazy would be the tips. But then again, there's so much out there nowadays. Monitor your score. Like you said, you love seeing it go up, right? I hope everybody listening, and if you didn't, now you do, go to our app, our online banking. We have this amazing new feature built in. It's the Your Score, and it's amazing. I love it. I probably am on there way too much, just watching it, like you said. I'm like, it went up. Oh, it went down. Oh, it went, and try to see what factored into it and why. And again, it's built into our online banking. It's on our app. And it's got so much more than just seeing your score. It actually has your full credit report, which is awesome, for fraud as well, and it'll alert you to any inquiries, and you can see what's going on. I didn't do that. It's a quick way to go see the balances on all your loans. It'll tell you like, hey, this is how much debt on your credit report you owe. This is how much monthly payments on all your trade lines, right? So it's wonderful to use. I think I had used a credit card that I don't really use often to buy my kids tennis shoes for back to school. Because again, you want to keep them open, a little bit of activity. I'm like, oh, this is a good opportunity. And I went on there and I'm like, oh, I have a balance. I forgot I had used it. It helped me like, oh, I need to go make that payment, So it's a good, quick, easy way to glance at all of your whole credit report, right? It even has tools built into how to improve your credit reports or your credit score. So say, hey, this is where I'm at. This is where I want to be. What tips can you give me to get there? So it's catered specifically to you, which is amazing. And a lot of times, use that when you might be looking to buy a new car, but you don't need it today. I would highly recommend go do that. Get your score up before you apply, right? Again, like we talked about, same car, but do you want an interest rate of 4.9 or 10.9? And it could be something as small as a maxed out small credit card that could get your score up, almost 100 points in 2 months, So definitely use that, or especially when you're home buying, there are certain minimums required, much less wanting to have a higher score for a better rate. Think about that purchase, right? It's huge. Use that tool. Let it built in, and it's literally catered to you. So I'm a big fan of that. Again, if you don't have it, I recommend getting it. It's great.
Yeah, another one that I really love, it's not directly only credit related, but we also have the Financial Wellness Center on our website. You can access it via our website, and it has a lot of different articles and like little mini courses and little tools and stuff that you can use. And those are mostly just informational. So I think it's a really excellent tool for people who, obviously we're getting some amazing information here, but if you want even more information about whether it's credit or anything else besides that, the Financial Wellness Center that you can access on Shell FCU's website is another great tool to
I
have.
will start on one article and end up like 5 articles deep.
Yes.
And I'm like, oh, that's awesome. Oh, that's great. Yeah.
They always link
big
different
advocate.
articles within the articles, and I'm like, oh, I want to know that too.
Yeah.
I want to know
Yeah.
that too. Yeah, I love it. I love
Yes.
using that, and it's definitely a really good like asset for our members to have as
100%.
well. Okay, that was really good information. Thank you so much. We've learned what we do want to do, but now can you tell us things that we should maybe not be doing so much if we want to have an excellent credit score?
Yeah. So, just think of everything we went over and the exact opposite, right? So make sure you're not doing, So again, like we talked about late pays. One late pay, like I said, it actually is kind of crazy. If you are like excellent, right? You're in the 800s and you've always, which to be there, you pretty much always have paid on time. And then you have a late pay, your score could actually drop significantly, 70 to 80 points because of one late pay, because again, it's just a system. It can't know you in your life, right? But it's just trying to figure out, you've never been late, all of a sudden you're late. Oh no, something happened in their life. Drops their score. Versus you might be, a 500 credit score area where if you're maybe more common to be 30 days late, another 30 days late, isn't going to do much. They're like, this is normal. This is where they're scored at. This makes sense. I don't think something major has happened in their life where they can't afford, right? So one late pay, depending on where you're at, could hurt so much. And a late pay is there for 7 years. It'll always report. Now, the score itself, I don't want to scare anybody, can bounce back. It doesn't take 7 years to bounce back. It can bounce back actually very quickly once you take care of a 30-day late. But again, pay on time. So that's a huge one. Again, don't max out your credit cards. Like I said, 10% would be the goal. If you have multiple credit cards and they're 100% utilized, it's substantially hurting your score, because again, it's just thinking we don't have funds to, go day to day. We're having to max out credit cards. They can only assume maybe the cash flow's not there. So a lower score, again, because all the score is doing is trying to say, how likely are they to be able to pay you back, right? So again, it can't know your personal story. Again, don't run your credit like crazy. Don't apply for multiple. That's another one too. If you're auto shopping, be careful not having it ran, at 20 different financial institutions trying to get that approval. Be careful with those as well. Again, don't ignore your credit report. Don't assume like, oh, I'm not looking to purchase anything today. I don't really care. I don't need it. I don't monitor it. One, identity theft is very scary and it's out there. It's a way to help that. But two, like I said, it's things you don't even realize, auto insurance, cell phones, renting apartments and stuff like that, even possible car rentals, all these things that we don't know. It's always important. That's just a fact of life. It is, and always working to get it up little by little, even if it takes a while, at least have an action plan built in. And again, identity theft, don't ignore your credit report.
Yeah, better to stay on top of it than be like, okay, I need to buy a car because my car broke down and I haven't looked at my credit in 3 years. And, it's
like,
wow.
Yeah. Facts for sure. They definitely want to make sure that you're ahead of the game, Another thing, some people co-sign. We see it a lot. Oh, I don't know. I co-signed for my friend. Oh, I didn't know my friend hasn't paid in 4 months. Make sure you understand what you're signing on for whenever you co-sign. You're responsible for that trade line just as much as the borrower, right? That's considered your debts, your responsibility, So make sure you understand what you're committing to, somebody that you're trustworthy, and understand it's your responsibility to pay it if they don't. That's a big one, unfortunately. We, do see sometimes that has hurt people's credit because they're like, oh, I didn't even know they weren't paying. I just assumed they were, up to date. And like I talked about, don't close up the close out the old accounts, just, thinking, okay, let me just clean it up, get a couple less trade lines, because again, those are actually really helping your average length of credit. The credit cards are your big ones, right? Because autos eventually pay off, right? Homes, you eventually will pay off, but your credit cards could be there forever and ever, So those are those trade lines you really want to be careful about closing, because they really help your length of credit and your mixture. I don't know if we talked a mixture on theirs too. So you don't want to say, oh, I really, I'm doing great. I haven't had to charge anything. Let me close all the credit cards. And then you just have an installment loans, which is your auto and your mortgage. And then okay, we've never had credit. I know everything feels like, wait, you just told me not to max out the cards, but now you're telling me make sure I have credit card debt. It is. You have to have a mixture.
A nice balance.
You do.
Yeah.
It's something they look at, and it shows, okay, she can handle credit cards as well. And again, don't close them just because you feel like, oh, they've been there forever. That's a positive thing. So definitely I say avoid the opposite of what we, were the positives for sure.
What about, as far as closing accounts, what about paying off a car early? Would that be something that would be helpful because you're paying it off earlier, or would it be more seen as kind of like closing an account and therefore maybe not the best thing to do?
Yeah, no, I mean, as far as a car is concerned, mixture is good, but if like I'm going to pay my auto off early, I don't want to have it and pay interest the whole 60-month term. Maybe just have like a small personal loan for $1,000 just to have that installment loan history as well. I will never advocate to not pay off a car early if you can, because of the interest rate. The dollar amount on that loan is so high.
Yeah.
I would never say, pay more interest. The good thing about credit cards, you could pay it before the due date and not have to pay interest.
Yeah.
But I mean, if you always pay your cars off early, maybe keep it at least 6 months to a year, just to show that repay history. Especially if maybe you're going to get your largest auto ever, you want to show that you've had repay history, but if you can, I would always say yes, and again, that's not usually going to be your one that's been open 7, 8, 9 years like credit cards can. Autos usually 5, 6, 7 year terms, but I would never advocate not to pay that off early.
Okay. Thank you. I kind of put you on the spot with that last question, but it just came to me. So one of the most important factors in building and improving your credit is having support and tools that you need. We kind of talked about some of those tools just a second ago. Here at Shell FCU, we really want to partner with our members. That's kind of one of the driving motivations, I guess. We want to really kind of enter into a partnership with our members. We want to help improve their overall financial wellness, which, as we've established, credit is a really important part of that. So what makes a credit union different?
Yeah. So, I mean, I would say everything because, I love Shell. Yes. But I mean, so we're a not-for-profit organization, right? So while other, larger financial institutions may have, they have actual like shareholders, right? They've purchased it. They have to make money for that. That's not Shell, right? That's not what a credit union is. We are a not-for-profit. We are literally member-owned. So our membership base, you guys own this credit union. You're what makes it up. And you're how we stay in business, right? And how we are a credit union is people helping people. That's what we're, that's the philosophy of how credit unions started, and having that personal relationship, being there for our membership. It's literally in our mission statement, right? That's why we were created. Credit unions started as a very small force, and look at them now because it works, right? People being there for each other. So I always say we might be seeing, larger places maybe closing locations or going more automated, some places you walk in and it's a machine doing your transaction, versus you have us the opposite. We're opening more branches, right? I feel like we've been opening, at least one a year for I don't know how long, right? Because that's not our philosophy. Ours is how can we be there for you? How can we make that personal relationship? Every step of the way, we have FSRs at all of our locations. They help you with both sides, right? The member service side and the loan side. That, my goal would be you have your person that you love working with, them, you go in and you know them by name. I've been here 16 years. So I've been back office a while now, but I still have times where I miss that branch interaction, right? I knew the members that walked in. I know I used to be a teller at Fairmont and we would get so busy, this was back 16 years ago, and I could greet almost everyone in line by name. I love that.
That personal touch. Yeah.
And that's what we are, even for the lending side. It might not be the teller transaction, but you get to know your people at your branch or on our call center. And, that's why we're different. We're not about, making a dollar. We're about what can we do for our membership to make that relationship. And then with that, because again, we're a not-for-profit, we're able to be very competitive with our rates, right? Let's talk about what really matters, right?
Yeah, the bottom dollar.
Yeah, we are able to, be, hopefully lower than that standard industry that you're looking at, and able to offer those lower rates and have different rates for different terms. With us, used or new, it's the same rate, right? So our auto loans, we can go as low as, 12. 36 months, right up to 84 months. There's lots to play with, but, we pride ourselves, again, on being able to be very competitive rates out there, for you to, again, we'll make the loan, but do what's best for you as the member. And, the least amount of interest you can pay, the better for your bottom line as the member, because, again, it's you guys that own it.
Yeah. I'm always going to advocate for credit unions, not just because I work for one, but because truly, I love my credit union. So, so what are some of the credit building tools that are offered by credit unions? We talked about one, but what are some?
Yeah. So, stuff that might not be available everywhere. You think about your shared secured loans. So again, we are here, and we have shared secured personal loans, which start as low as $300, shared secured credit cards that start as low as $500. So this might be somebody, you're 18, been at your job just a couple months, but you've saved up the money and you want to get started building your credit. So shared secured essentially is just you borrowing money against your own. So if it was a personal loan, you put it in your savings and we give you a loan against it at a very low interest rate because it's against your own money, right? And the credit card would be, again, you'd put the $500 in your account. We'd put that on hold to give you the credit card. And then after 6 months to a year of paying on it, that's when you apply, okay, hey, can I release that hold? Can I maybe increase it? And that's where the baby steps get started. That can also be, maybe you've had some credit issues, maybe recently out of a lot of charge-offs, maybe or late pays or bankruptcy. That's the way we can help you get restarted building that relationship. So again, I'm big, let's get started with shared secured. Like I said, we do have very flexible rates. We can do anywhere from 36 months. We can do lower. I'm just saying that's where the rates start. Up to 84 months, on qualifying loans. So we can look at what's best for you, what's best for your monthly, payment. And again, hopefully at the lowest rates out there. That's something that we definitely pride ourselves on. And then, like I said, we have that awesome tool. I am such a fan of it. Use it. It's built in. Because how many times do you log into your online banking just for other reasons, right?
Yeah,
use it. It's right there. I'm on my app and I work here at least twice a day, right? And I'm like, okay, what did I use that on? Did that transfer? Is that due? So utilize it. It's just such a huge, I'm a huge advocate for that. I'm so excited we finally got that and that it's built in. It's definitely a huge enhancement for our members.
Awesome. So let's do a little hypothetical. Let's say that I'm somebody who maybe doesn't have the best credit. I've, had some hard times financially, but I'm ready to start building my credit score back up. What specific steps would you recommend that I take to get started on that journey?
If you're someone, like you said, you kind of, you've had the hiccups, I would definitely say, like we kind of talked about how when they build a score, nothing is set, this is catered and, cookie cutter to everybody, right? Visit a branch, give us a call, sit with one of our FSRs, let us see what's going on. Let's pull your credit. Let's see, apply, start with that shared secured, bring that 300 knowing. But a lot of people sometimes think, oh my gosh, I know I'm not going to get approved because I've had some issues. It's not as bad as they think, so let us look at it. It could be we're actually have really good credit or, it's not as bad as you thought, or if it is, maybe again, something that there was a lot going on, we could start with the shared secured. That's the beauty of having that relationship. They're literally the FSR, and they're on the phone as well. They're going to pull it. They can go over it with you. I love our branches. It's the little things I always say. Like they have the screens that turn around. I'm always like, turn the screen around, show the member, let them see like, hey, this is the trade line. This is where the charge off was. This is where you missed a payment. Or look, you've done great. You've paid on time this many months, I feel like the visual is very helpful.
Yeah.
So I'm a big advocate on, coming in and letting us look at it with you. Again, that's just the partnership, right? That's what we're in this for. We're here for our members, the wellness side of it too. Like you said, we have all this out there, the articles, we want to do what's best for you to be the most educated you can in life, not just on your loans, right?
Yeah.
But on all your finances. So again, let us relationship lending. That's what we do. That's why, why we thrive. I feel like that will always be, we love getting, surveys back on why it was different, the positive, and it's always, that that relationship that's been created, that will hopefully last forever, Like I said, I've been on the back office a good while, and I'll still have members email me like, hey, you did my loan, 5 years ago. I'm like, oh, let me get you, I'll get the loan officer to help, But again, it's just that relationship that's built. And I love, generational credit union members. I'm like, oh, their parents were members, their grandparents were members. I have little ones. I have a 4 and a 7-year-old, and they have their Tutma accounts. I opened them right away. Like, they have that member number, and it's just passing it on, to the next generation as well. And hopefully we'll be here many, many more years to pass on to the next and the next and the next.
Yes. I'm such a huge proponent of education. And so I love what you talked about with turning the screen around and letting people see it and letting them see for themselves and kind of walking them through all of that, because I definitely feel like if you just kind of opened it up, it can be very overwhelming. There's a lot of stuff, as we've been talking about, that goes into it. So I love that very personal piece of it where you're just walking people through it and giving them the education that they need to be successful. It's so important. So we've gotten some really good life-changing advice so far, and we will be wrapping up pretty soon. But before we go, we're going to play a little myth or fiction. Okay. Wait, myth or fact or myth? Myth or fiction. Yeah. So I'm going to give you a credit score fact, a statement, but I want you to tell me if that thing is actually a true fact or if it is a myth. Okay, ready? First one, checking your own credit report will lower your credit score.
That is a myth. Don't look at me cheating. I'm aware, I know it. So like we said, the your score, or there, of course, we know that there's, tons of options out there. That's a soft inquiry, right? So it's not you applying for a loan, getting a hard hit. That would be horrible, right? None of these things would exist if that was a thing. So that's a myth. A soft pull isn't actually even going to show as an inquiry on a credit report. So myth.
Okay. Next one. Thank you. Payment history is the biggest factor in your credit score.
If you've been listening, I hope we all said fact.
I know. I feel like this is also kind of a quiz. So
it's a quiz for the viewers. Yeah. So the 100% fact, right? So again, that's the most important. The whole point of it is how likely are you to pay your bills, right? So if you paid them on time, that's going to be the biggest factor. Again, like I said, 35 to 40%. It doesn't matter what scoring model they're on, what version they're on. That's going to always be the biggest factor for sure.
Awesome. Okay, next one. Closing a credit card account may lower your score.
Fact. Again, I love this quiz, right? So like we talked about, that could, and it could substantially, especially if you closed a couple, Again, I think a lot of people might feel like, oh, I have opened that in my 20s. I don't use it that often. Now you're much more established. You're like, oh, it's not even a high trade line. Well, don't close it. You could apply for a credit increase, if you want to, just to have it. But again, don't close it, because length of time accounts have been established is actually the 3rd highest factor into a credit score. So again, you don't want to turn around and hurt yourself by closing those out. So
awesome. Next one, applying for several loans or cards in a short time can hurt your credit.
Again, true. That's fact. Yes, fact. Like we said, 2 to 3 a year would be the goal to have on inquiries. So you definitely don't want to go to the store and have them pull it, at 4 different department stores in one day, or when you're auto shopping, So again, I'd be very careful and diligent on when and who you're allowing to pull your credit.
Okay. This is one I don't think we specifically covered so far, but the statement is income is factored into your credit score.
That's actually a great one, because that's a myth. That is a myth that most people, I can't tell you how much we hear, well, my score is low because, I only make X amount, or I don't make X amount. That has nothing to do with it. Like we kind of talked about in the beginning, you have the credit bureaus and then the scoring models. Neither of those know how much money you make. They do not know your income. So that has nothing to do with generating the score or what's, reported. So,
okay. You only have one credit score.
That is a myth. So if I've at all gone too deep, you get that now, So yeah, you definitely don't. You can have, again, there's 3 bureaus, first of all. So you could easily have 3 different right there. Each one's going to be hopefully, it's not a huge difference. They're all, but you just don't know. Equifax may have 10 of your trade lines being reported to it, but Experian might only have 3. You don't know. And not all places, again, you have to pay to to send that information over to them. So, a lot of times we'll have like on auto loans, we're like, I paid on it 5 years, to a smaller, dealership where I would walk in and give the payment to the lady at the front desk. They don't pay to report to the credit bureau. So stuff like that. So no, you can have tons within all three of those bureaus. And we have, again, 2 different scoring models. Within our scoring models, we have multiple versions. So
oh, wow.
You could have tons, so definitely not just one.
Okay, next one. Late payments can stay on your credit report for up to 7 years.
Unfortunately, fact. Yes. So for sure, like I said, that one late pay, you may have a perfect credit report and it looks beautiful, but one time, in 2000 and who knows what, you missed a payment and it sits there for 7 years, So again, your score can recover from it very quickly, but the mark itself will be there 7 years. Yes, ma'am.
Wow. Okay, that was really good information. I feel like I've learned so much. So even if it's just for me, thank you so much for teaching me all of this. So I think we have a question from Shy. Can you pull all 3 of your credit reports at the same time?
So that would be a try pull. And so for mortgages, that's standard. We don't do that here at the credit union, our mortgage side, but for on our consumer side. But yes, you can. They can do all 3 and do a tri-merge score would be if they pulled all 3 to give you what your score is, or if you're just wanting to see all 3, you can definitely see what like ours specifically. We talked about the Your Credit Score. I can tell you that's a Vantage, Equifax, or TransUnion. I'm sorry. So that's TransUnions, So you could definitely want to see what your Equifax, what your experience is as well. Yeah. Now, can we pull all 3 here at the credit union? We wouldn't be able to do an Experian on the consumer side.
Okay, good to know. Thank you. It looks like we had a little bit of technical difficulties at the beginning, but I just want everyone to know that this has been recorded, so we will be uploading that recording. So if you missed the beginning, or even if you just came in late, if you missed any piece of it, it is going to be recorded, so we'll be, posting that. And keep an eye out on socials. We'll be posting it on there, and then you can just keep an eye on the YouTube channel as well. But thank you all so much for being here. And Yasi, thank you so much for being here today and for all of the incredible insights and all the tips and stuff that you shared with us. Be sure and follow us on our socials for more educational content and different updates and stuff. But thank you so much for being here.
Thank you for having me. I know, we look forward to these all the time because, again, it's just giving the information that, is needed. Life is so busy. Maybe you don't have time, but you know what? Tonight, go get on YouTube. Watch the video. I always say our marketing team probably sees more of me than they want to. So I'm go find the videos where we have all different, topics, credit, in the credit world on there. So again, we love our membership. We appreciate our membership, and we do everything we can, to give you guys, what we feel can help you guys, So again, thanks for having me.
Of course. Yeah. And if any time, just as a general thing, if anyone has any topics or something that they're particularly curious about, definitely feel free to shoot us a message on our socials or leave a comment. If there's a topic that you would really be interested in seeing that we maybe haven't covered yet or maybe haven't covered in a while, let us know and we can we're here for you. Yes. We're here for y'all. So we want to provide the information that is going to be most useful to y'all. But thank you all so much for being here. Just double checking one more time for questions, but I think we got them all. Thank you all so much for being here. I appreciate you all so much. I hope you have an amazing rest of your day. And thank you for spending some time with us. Bye everybody.